Okay, good day, ladies and gentlemen. In this particular video, I'm going to be teaching you what I call the thoughtful trading strategy. Okay, so the thoughtful trading strategy is different from your thoughtful soup. All right, the thoughtful soup that ICT taught is different from the thoughtful trading strategy. Okay, a lot of people know about the thoughtful soup strategy that was taught by ICT, but they do not know about the thoughtful trading strategy. And the truth of the matter is, the turtle soup that ICT taught was actually derived from the turtle trading strategy. Okay, it comes up when the turtle trading strategy fails. That's when you have the turtle soup. Okay, so that's why it is called turtle soup. That's why ICT named it turtle soup. Okay, so basically, the turtle trading strategy is a trend following strategy. Okay, so let's say you have an uptrend like this. You're seeing higher highs and higher lows, just like this. Okay. Now the idea that the total trading strategy, entails is that if you are having higher highs and higher lows, the lows are supposed to be protected. Meaning, price is not supposed to go below this low if the uptrend is to continue. Okay, price is not supposed to cross below this low if the uptrend is to continue. Price is not supposed to cross below this low if the uptrend is to continue. That's why the profile of an uptrend is higher lows and higher highs, higher high, higher low, higher high, higher low, higher high, like that. You would notice the price does not go below these lows, right? So that's the profile of an uptrend based on what the total traders are looking out for in order to trade. Okay, so the way they now approach the market as total traders is that once markets, if they have identified the trend, if they have identified the trend to be an uptrend, for example, what they do next is they'll place an horizontal line on the eye. Okay, you place an horizontal line on the eye and wait for the eye to get broken. So a candle needs to break and close above the eye. Now, once a candle breaks and closes above the eye, you do not need to wait for any retest. Okay, the power behind the system is just for you to enter once a candle closes above the eye, then you place your stop loss below the low. Okay, so the strength of the system is in the fact that that low is protected. Since we have identified this to be an uptrend, we don't have any business coming below that low, so they place the stop loss, the SL, a few pips below the low. Okay, so markets can play around and come down a bit, put them in a little bit of drawdown, but since this low is respected, it's still going to push in the direction they want it to go. So that's the major idea. So I'm giving you the foundational idea of the total trading system. Though there are other little concepts, by the way. When it comes to the total trading system, there's an indicator for it. There's a way they look back how many candles. I think there is one for 55 candles behind. There's one for 20 candles behind. All of that. All those ones are just by the way. The major idea, okay, the fundamental idea of the total trading system is what I'm giving you right now, and it has to do with following the trend profile. So if it's a downtrend, you have the lower high, lower low, okay, lower high, lower low, lower high, lower low. No, now in a downtrend, the highs are supposed to be protected. If a downtrend is to continue, price is not supposed to come above this high, come above this high, or come above this high. Okay, so they take advantage of that to position their stop loss. All right. So what they do is once market breaks a low like this and a candle closes below the low, they take a sell trade and place the stop loss a few pips above above the high, with the understanding that if the downtrend is to continue, price is not supposed to go above that high. That high is supposed to be protected. If there's any direction price wants to go, it's supposed to be downwards, putting them in profits. You understand? So that's the major idea behind total trading. I'll give you an example on the chart so that you see. I'm just giving you illustrations for now so that you can first understand it before I go to show you example. And now, how then do we come about turtle soup that ICT was teaching? Okay, this is the idea behind the turtle soup. Look at this. So now a turtle trader would want to, this is an uptrend kind of profile, right? Price is moving in the upward direction. A turtle trader will want to enter at the break of this high right here. Okay, his SL is going to be a few pips, SL a few pips below that low, right? So he knows that that low is protected, so price move come there. Now price is going to push in the opposite direction, putting him in profit, right? Now another turtle trader might decide to want to come and trade somewhere here. Okay, putting SL, below this low. Now once price breaks this high, okay, another turtle trader can decide to buy once price breaks this high. Okay, just buy right at this level where this high gets broken, right? Now that trader that bought here will place stop loss below this low with the mindset and understanding as a turtle trader that this low is not supposed to be traded to by price. Since it's an uptrend, this low should be protected. Now price comes down to take this low, sweeping the liquidity and the stop loss below this low, then moves aggressively in the opposite direction. Now this is what we call turtle soup. So the turtle traders are in soup at this level. Okay, so that's why ICT gave it that name. Okay, so I'm giving you like foundational secrets behind some of these concepts. This low gets swept irrespective, but even as it swept the low doesn't mean it's going down. It just swept the low to put those turtle traders that put their stop loss here to sweep their stop loss as liquidity, and then that is used as fuel to push price in the upwards direction. So basically that's just what the concept is all about. Okay, so let me look for a beautiful uptrend. This is a very nice uptrend. This turtle trading strategy is only for a trending market. Okay, if you use it in consolidation markets, it does not work too fine. Okay, so I'll use horizontal line to depict the break. So okay, this is an high right here. Okay, price moved up, created an high, then pushed down, then moved up to break that high. So once this candle is closing, okay, above that high, look at this candle. Once this bullish candle closes above that high, I'm entering a buy trade. This is not a system where you're waiting for any retest. No, the major idea is knowing that the low will be protected. So just enter your buy trade from here. Then you can target maybe 1 to 1. So the stop loss is supposed to be below this low. Okay, somewhere down here. Okay, so this low is seen as a protected low. If our uptrend is to continue, price has no business coming to touch this low. So please put your SL here confidently and expect higher prices since we have spotted an uptrend. Okay, so see what happened. See the way price pushed in the upwards direction, putting those trading the turtle trading strategy in profits. Okay, so right here I have another eye created. Okay, so I have this eye created right here. All right, and this is the corresponding low which is not expected to be traded to. So let me copy this line. All right, so this is the low. You're not expecting price to trade to this low, so we expect price to break. Once it breaks, you're entering your buy trade right here, stop loss below this low. Okay, and you can see the way price pushed in the upwards direction. So you can just keep doing that again and again and again. If you take this as a high right here, your stop loss goes below this low. Okay, price breaks right here, you enter your buy trade, and then your stop loss goes below this low which is protected, so you expect higher prices. Okay, you can see the way it's just pushing in the upwards direction. Okay, so let's see this is another high right here, and then this is the corresponding low. Okay, so we expect price to break the structure in the upwards direction. Okay, once it does that, this low is protected, so this is where our SL will be. Okay, so you can see what happened. See the way price respected that low. Price came down, touched the low, but did not go below it, so your SL would not have been triggered, then pushed in the upwards direction. So you can see that the concept is actually solid. Okay, they have the understanding that this low is supposed to be protected. If price is to continue the uptrend, the only time it's going to disrespect it is if price has decided to change from change gears from uptrend to downtrend. Okay, though in some few occasions we have what we call a turtle soup, which is something I've already explained. Okay, so look at this also. This is a low right here. This is an high. Once price breaks that high, you're entering a buy trade. It breaks it right here. Enter your buy trade to move upwards. Protective low is down here. Okay, so okay, this is current price action. Okay, so price is playing within the range. If it's going to continue with the uptrend, it won't take this. It will push up and give us, you know, an upwards movement to continue the uptrend. So basically, that's just the idea behind the turtle trading system. I hope at least this has added something to your knowledge when it comes to forex trading. Alright, if you got any value, please subscribe to the channel and turn on the notification bell. I'll see you in the next video. Thanks for watching.